guys, welcome back to another video on investing. I'm Dave, and if you're a subscriber, thank you for coming back and continuing to watch the content. If you're new here and you find the video entertaining and useful, please consider hitting subscribe at the end of the video. So today we will be talking about Rocket Lab, and more specifically we'll be going into their numbers, trying to do some math, kind of back of the napkin math on potential price targets, where we think they might be in 5 years' time, to try and get a good idea of their financials and where the company may be going. I think it's important for any stock you own to have targets in mind and how the company will get there based on their revenues and products and things like that. So let's jump into the charts and graphs here and take a look. So to start off with on Rocket Lab, a lot of you may know there's actually two sides of the business. A lot of people out there only know about the launch side, but the space system side is really equally as important. I'm growing more and more convinced that it is an extremely important factor to the company's success over the long term. Kind of got interested in it because of the launches, but I'm really getting more and more interested in the space system side. So on the side of the space systems, they do things like manufacture satellites, design satellites for customers, as well as various parts. They have solar panels. They actually just acquired a company recently who manufactures extremely high quality solar panels. It's a very big acquisition for them that recently closed. They also do star trackers, flight software, separation systems, reaction wheels, satellite radios. So pretty much anything that goes into a satellite, they want to be able to make that part for you, or just even make the whole satellite for you. Then, of course, on the launch side, they have their current launch vehicle, which is the Electron. It is currently expendable, but they are working on making it reusable right now, which will greatly reduce the cost of providing the vehicle and allow them to launch more frequently, as they don't have to build a new one every single time. They can just refuel it and do some maybe minor refurbishment and send it back off. So we do expect their margins to improve significantly for Electron launches, as well as improve the cadence greatly over the next several years. Now, their new rocket, called the Neutron, is not yet launching, but they recently announced it and it's under development right now. It's kind of one of the sources of a lot of their OPEX and why their expenses may be high in the next few years. However, it's looking like it will be a very dependable and reliable rocket that will have a high level of reusability and bring the cost down for payloads up to 8 tons and be a great competitor to the Falcon 9. So they were originally forecasting launches for the Neutron to begin around 2024. So that's about 2 years from now before we really see any benefit from those investments. So those are the two sides of the business to keep in mind here as we go through the valuation process, and I would say they're both equally important, so you don't want to just get caught only focusing on one or the other. Okay, so I've gone through and pulled some important points from various investor documents from Rocket Lab. This one was on a investor presentation from March of 2021. So what they said is, it is notable that Rocket Lab estimates 2021 revenue of $69 million to rise to $176 million here in 2022, which is 155% yearly growth. In 2023, its revenue is predicted to be $262 million. In 2027, so now we're talking about 5 years out from right now, the company's forecast for revenue is $1.571 billion. So going from 69 million to 1.57 billion is extremely fast growth for a growing company. It continues on here. Rocket Lab expects a positive EBITDA of $26 million as of 2023 and a figure of $505 million for 2027. However, the projected unlevered free cash flow is expected to turn positive in 2024. of free cash flow of $97 million, and by 2027, it is expected to reach $465 million. So those are some projections from Rocket Lab themselves. I'm not just pulling these numbers out of thin air. That's what the company is providing to investors on their investor relations webpage. Here's kind of what we're looking at in terms of margins and how things are changing right now. We're obviously losing money, but long term, our target for cost of goods sold is about 45%. So if you're launching a rocket or whatever, it will cost you 45% of what you're making, and then you also have 15% R&D and 10% SG&A. So you can kind of use those numbers to do some math on the potential expenses for the company in the future. Those are their targets. Obviously, they're way off it right now as they continue to invest in growth in the future. Now, in terms of historical and projected revenue, we can see that chart there showing just that astronomical growth. No pun intended there with rocketry, but and the breakdown between space systems and launch revenue. So they do have launch revenue higher than space systems revenue, although space systems is actually very quickly catching up. And I would say this has been happening even faster than anyone expected, as this chart is about a year old now, and there were some hiccups in the launch business due to COVID restrictions, and space systems business has really taken off. So I would gauge these to be a bit more evenly split by 2027, if not even slightly favoring space systems. That's just me personally, but this is kind of the breakdown they had projected out as of last year. So in terms of their launch vehicles, right now, of course, it's all Electron. It's their only operating rocket, but beginning in 2024, as I said, we're starting to see some Neutron launches. Of course, it'll start small and grow rapidly. Eventually, you would expect to see Neutron become a bigger part of the business and bring in more revenue than Electron. So for operating expenses, it's extremely lumpy right now. Things are changing rapidly, but if we back up to this chart right here, we can see kind of the numbers we're targeting. There have been some acquisitions recently, 3 major acquisitions announced in the past year or so that have closed or are closing. So that has obviously contributed, as well as stock-based compensation, SG&A, and of course, research and development is really a big one when you're building a brand new rocket. So this is what we're looking at right now for operating expenses. So the last quarter was about $40 million, maybe a little under, but they were forecasting for Q2 2022 to come in around $40 million. So it'll go up again a little bit going forward. Okay, and just total addressable market is always good to think about, because no company can just grow doing the same thing forever, right? There's a market. Eventually that market may get saturated. So what's the total addressable market for these products? And obviously, the bigger the pond, the bigger the fish can grow, if you will. So if you're going after a huge market, the company can grow massively. If the market is not actually that big, then even if you take the majority of it, you can't really grow to be that massive. So in terms of the launch business, they're about $10 billion a year for the Electron and the Neutron rocket. So not massive numbers, but not tiny either. Space systems has a total addressable market of 20 billion, which is why I find it very interesting. The addressable market is actually bigger than the launch business. And I think as we see more and more quarters, we're going to really see how important this space systems business is. Has a lot of resiliency compared to the launch business, where you have a lot of competitors in the launch space right now coming online, like Astra, and obviously SpaceX is the big one. But in terms of the space systems business, I think Rocket Lab is still very well positioned. So this is an important one that may not be glamorous, but I do think you should keep your eye on. And then, of course, the space applications business is really the massive untapped potential. You look at, for example, SpaceX's Starlink is looking to have an insane addressable market. So things of that nature, radar, optical, RF, all sorts of services that can be provided by these space applications. So those are kind of the addressable markets, and now we're looking at some numbers here. So in 2027, as we saw in the previous slide, we're looking at a revenue of 1.54 billion, which represents massive growth over the next 5 years in order to get there. So their target gross margins, as we saw previously for both these, was around 50%. I think it was 55% in the slide, but I always try to be a bit more conservative, so we're going with 50% gross margin here is the number I'm using. That's on both space systems and launch. Now, these numbers are not here yet, but as they improve in terms of efficiency and with scale, as well as with reusability and bringing the cost down and integrating with all their vertical integration, they should be able to hit these numbers. So that means that if you go through those, the math, our gross profit number for 2027 is $770 million. Not chump change, but we're not talking one of the biggest companies in the world or anything like that, but still a lot of money. So we look at $770 million in gross profit in 2027. That doesn't include a lot of items like operating expenses, SG&A, or research and development, right? So we have to take those into account when we are doing our numbers. So right now, based on what they're forecasting for the next quarter, if you annualize that, we have an operating expense number of $160 million per year. So you can kind of try and figure this out, use your own numbers, plug them in how you want. Just to be a little conservative, what I'm projecting is 15% annual operating expenditure growth rate. So this will take into account the company's growth, and SG&A always goes up, as well as R&D is definitely going to go up with the development of the Neutron rocket, although they are doing it as efficiently as they possibly can, setting up new launch pads, new lines of business, factories, all sorts of things. So I put a 15% growth on their operating expenses in there. You can do more, you can do less, but I come out to, in 2027, operating expenses number of $321.8 million, so call it $322 million. So what does that mean for our operating profit? Well, you just subtract them, pretty easy, and we come out with, in 5 years, Rocket Lab should have an operating profit of $449 million. Now, of course, these are all guesses, it's all conjecture. This is kind of what I'm thinking based on numbers that have been provided and things that have been said on earnings calls. Things can change, clearly. I think the space systems business is doing extremely well. I have high hopes for the Neutron, and obviously if Electron can become reusable, that's an absolute game changer. We've already seen it caught from space. I think really all the hard work has been done on making it reusable. There's just really some minor things that have to be done at this point to get it to the point where they are relaunching Electron rockets. Although I do want to note that there are a bunch of launch profiles that, for whatever reason, the orbit or the payload, that the rockets will not be able to be reusable. So take that into account when you're thinking about margins on the Electron rocket. So all that being said, what I came out to is $449 million of operating profit in 2027. So let's think about this now in terms of the stock price and what kind of multiple we might give the company based on these numbers. So if we have $449 million operating profit, multiples can vary based on a lot of different factors. A lot of it is outside the control of the company, things like the macro stock market. I mean, we've seen in the past year, sometimes growth companies can have multiples that will just inflate as investors are willing to pay more and more for that growth. Sometimes they're not willing to pay as much for growth, and these things can contract, like we're seeing right now in the stock market, as a lot of these growth companies have been absolutely destroyed. If you've lost money on any of these companies, I'm right there with you, believe me on that one. But anyway, so this number of 449 billion doesn't include taxes, any interest on debt they might have, and things of that nature. So it's just one number that people use, but not the only one for sure. And another factor that can affect the multiple you assign to this revenue is how fast a company's growing. So, if a company's going really fast, you might be willing to pay, let's say like a 50x multiple even, something really high, because those numbers are going to keep growing in the future. So you're willing to pay more for what it is today. Whereas a company, if it's completely stagnant, not growing, just staying steady, you're probably looking at a multiple of more like 9 or 10 or something like that, or even less, like 7, depending on the company. So it can really vary. In Rocket Lab's case, it's growing extremely quickly. I mean, if we just look at some of these charts, like you can see the parabolic rise here, right? So like that, in my opinion, should net them a pretty decent multiple. But let's just take a look. I always like to be conservative here. So if you put a 20 multiple on that, 449 million. Okay, so if you do the math on this, a 20 multiple on 449 million in operating revenue gives you a valuation on the company of $9 billion. Now, if you want to be a bit more generous and give it a 30 multiple because you think it's growing fast and investors are willing to pay for the higher multiple, then you're looking at something like 13.47 billion. And if you go even higher at a 40 multiple, we're looking at $18 billion. So what is Rocket Lab worth today? Because that's the question, right? Well, today, if you look at its market cap, we are worth $2.32 billion. It's come down a lot of late, especially due to these current trends that are extremely punishing to growth companies that are not yet making a profit, companies that are in their earlier phases. So the current value of the company is 2.32. If you think it's going to make 449 million in 2027 operating revenue, give that, say, a 20 multiple. You're looking at doing a 2.7x of your money. So you're multiplying your money by, over 2.5 times, which is pretty good. If you give it that 30 multiple, you're giving it 5.8x, so almost 6 times your money. If you give it the 40 multiple, we're talking 7.75x, so 7.75 times your money. So that's getting close to the 10x category, which is a pretty rare beast to find in the stock market. If you're trying to find a 10x in 5 years, it's always hard to do. Obviously, multiplying your money like that is great. So for a lot of investors, even a 2x in 5 years is a pretty acceptable return, right? That's a pretty good return. Probably even better than good, I would say. For safer stocks, a 2x in 5 years is great. So according to this, by a conservative number, we should at least be doing almost 3x and possibly even 7 or 8x, which is quite acceptable to me. So am I willing to pay for the company valued at 2.32 billion today if I think in 5 years it will be worth, well, let's call it 14 billion? And the answer is absolutely. So that's kind of my 5-year price target right now for the company. Pretty aggressive, looking at a lot of growth and very high returns. If we're looking at today's stock price is $5 per share, and I'm looking at a 5.8x as my 30 multiple kind of middle target. That would bring a stock price of $29 a share. So, let's kind of look at what some analysts are thinking about it. Okay, so this is from TipRanks, a great website, by the way. I do recommend you check it out if you're researching stocks. Basically just compiles the analysts covering companies and gives you their price targets, as well as kind of keeps track of what analysts have the best track record or the worst track record, etc. So these price targets are all only 1 year out, not 5 years like I'm looking further out into the future. I always like to have a longer time horizon because anything can happen in 1 year. I mean, we've seen what's happened with COVID. We've seen what's happened with the recent market crash. Anything can happen in 1 year that is completely out of the company's control. So I just like to look 5 years out. But based on these 5 analysts covering it, which is a pretty small number because it's a smaller company right now, but that's what we have to work with. The high price target is $18 a share, whereas we're currently under about $5 a share. So that represents more than a 3x just in 1 year. Like I was looking at conservatively a 3x in 5 years just to be safe. They're talking 3x in 1 year here. So that's extremely bullish, although they probably made that price target back when Rocket Lab was trading above $10 a share, I would have to imagine. Average price target for 1 year is $14. The low is $6, which is still up from where we are right now, but that is a bit of a lower number there for sure. So the average price target represents 182% return in 1 year, which is bonkers, which is a great return. So, I mean, a lot of these targets are probably going to be updated because Rocket Lab has fallen so much, but this is what I don't like about following analysts. A lot of them just seem to just follow around the stock price. I find, the price goes up, so then they bump their targets even higher. The price goes down, they lower their targets. It's like, come on, like, are you making a target, or are you just telling us where the stock is trending right now? Like, anyway, nevertheless, this is what we have. So I think this is fairly bullish based on these analysts currently covering the stock. 4 buy ratings, 1 hold rating, no sell ratings, and all the price targets are above where they're currently trading. We have a really good average price target for 1 year out for the company. So that's my analysis on Rocket Lab. Just kind of some back of the napkin math. I haven't done it's not like a full spreadsheet of it, but I think it's important for every investor to at least do a bit of math and see where they think their companies could be valued in the coming years. So there you have it. Those numbers are from Rocket Lab themselves. The operating expenses, I kind of just guesstimated on that, but it can definitely vary pretty extremely, as well as, maybe the margins can be lower or higher than their estimates. I mean, everything can change over time, of course, but for me, we're looking at a price target of at least, I would say, a 5x in 5 years, which is great. You can't complain about that for sure. So that's why I'm holding Rocket Lab. I'm going to continue to watch the company, listen to all the earnings calls, and provide feedback. So if you're interested in this company, if you're an investor in it, please do consider hitting like and subscribe, and come back for more content in the future. Thanks. See ya.